You talk about 4 million being due to face increases next year of around £250. I just wondered if you can explain a little bit more about why you think they're in a position to withstand this increase and why it is that it won't lead to material losses for banks this time around.
Well, I think there's several thoughts behind that. So let me start. I think it's absolutely the first thing we should say about this is that there is nothing easy about the situation we're in at the moment. That we are very conscious of the effects it's having on households, very conscious of that. And you're right that 4 million households in this country are exposed to rate rises over the next year. And that's obviously a very substantial number. There are two things I would draw out there to underpin the point I made about the current situation. One is that if you take the aggregate mortgage debt service ratio now, it is lower than it was, for instance, before the start of the financial crisis and at the time of the early 1990s recession, when we had quite a severe, obviously, mortgage and housing crisis. We've also, obviously, through the work of the FPC, put in place the framework on high loan-to-income borrowing. That is actually also the tail of the distribution of high loan-to-income borrowing is now smaller, appropriately smaller, and that will also increase the robustness of households in that sense. So that's the first point. The second point is to just re-emphasise the points I made at the end of my opening comments. First of all, two parts to this. First of all, banks are now required by regulation to, frankly, support their customers through these problems more than they did in the past. So in other words, they can't resort to repossession with the speed that has gone on in the past. But there's a second part to that, which I think is very important, and it's the point I really emphasised at the end of my opening remarks, which is this, that of course a financially robust banking system will be better placed to do that. I mean, their resources will be better placed to support their customers. We saw that during COVID with mortgage holidays. The banking system will be better placed to support their customers, and therefore, I very much hope and believe that more customers will be supported through this, and we won't get the level of repossessions, and of course, therefore, the level of loan losses that went on in the past.